Hello everyone, and welcome to this educational presentation of how to become a consistent trader in 4 simple steps. Now, as you see here in the title, I underlined consistent trader, but I actually should have underlined simple because I'm going to show you just how simple it is by using our new platform on how to become a consistent trader. And for example, if we look at this chart right here, we see here that it had a very strongly sustained upward trend. Now, most traders have difficulty with this. Maybe you get in and you get out too early, or maybe you don't know where to get in. Well, I'm going to show you the simplicity today of our platform and with our methods and strategies and how you could have been able to easily, quickly identify setups such as these. And once again, this is all done through the simplicity and the ease of using our new PTS Primo charting platform. I developed this with Pro Trader Strategies, and we strongly believe it. It's a trading educational portal that you've been searching for. So this promises to be a great presentation today. Welcome, my name is Steven Primo. I'm the president and founder of Specialist Trading. And about 8 years ago, I teamed up with Pro Trader Strategies, where all we do is educate our students and members around the world in over 110 countries and in virtually every state in the United States, all of the techniques and strategies and methods that I've accumulated in my 4 decades of trading. I started out trading on the floor of the Pacific Stock Exchange. I was on the trading floor for 16 years, and 9 of those years I was a specialist. That's where you get the name Specialist Trading. Now, trust me, a specialist doesn't mean that you were any more special than anyone else. It just means that if you called up your broker and you said, I want to buy 100 shares of IBM, well, your broker would then call or contact the floor trader, and he would find the trader who specialized in making a market in IBM. So a specialist simply made markets, buying or selling stocks so that you could purchase them through your own broker. That's what I did for roughly 9 years. I was a specialist during the crash of 1987 and the bull market that followed. After leaving the floor, I managed money and traded my own account. I've traded just about every market, every environment you can think of. I've traded straight up, straight down markets. I've traded just about every system, every technique or method you can think of. So in my 41 years of trading, I know what works and I know what doesn't. So you don't have to waste your time and most especially your hard-earned money going through systems, $10,000, $20,000 systems, wasting your time on useless classes that don't show any consistency. I can show you and lead you to the direction that has a consistent path. And that's what we're trying to do at Specialist Trading. So that's what we are. We're an educational company so that you can ultimately be supplied with the tools, techniques, and the strategies you need in order to make your own trading decisions. And we just formulated the new platform so that we can make it that much simpler for you to make your own trading decisions. So I'm going to show you a lot of performance results today, but before we begin, we are required by law to first display this slide. So please take a moment to view our disclaimer. As I stated, I'm going to share with you a lot of performance results using a lot of different graphs on these 4 simple steps you can apply. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all the examples I'm about to share with you are strictly for educational purposes only. So as you're taking a brief moment to view our disclaimer, I would also like to take this time to invite each and every one of you, if you haven't done so already, to follow us on Twitter. There's our handle right there. You may want to copy that down. I post different information on a daily basis, anywhere from signals that our strategies have generated to actual bits of wisdom I've accumulated along the way to help you with your trading. So lots of great free information. Feel free to follow us on Twitter. Okay, so as I stated in the very opening statement of this presentation, we are a little bit different from other webinars you may have attended in the past in that our sole goal is simply to educate you. We are first and foremost an educational company. We don't promise to have the $1 million system that will never lose money, that will help you retire within the next 6 months. In fact, we don't believe in that. If you ever hear anyone talking about that, we feel you should run. Because I've been trading long enough to know that you will have losses from time to time, and that's perfectly okay. Just the same way every athlete will strike out or not make a basket, just the same way every entertainer will not, have a hit movie or a hit album every time. It's just normal. What we're preaching and what we're trying to instill in all of our members around the world is consistency. So that's my goal, not to force feed you signals, not to tell you what the perfect market is or the perfect time frame is, the way so many other webinars you may have attended have promised. Our only promise is to supply you with sound fundamental education that has stood the test of time. This is the way I was taught when I was first struggling 41 years ago. This is the way my mentors taught me, and I believe the things that they taught me are what has been able to sustain me for over 4 decades now. So that's my goal, hopefully to sustain you, to teach you how to trade with the specialist edge, the same edge that was taught to me. And believe it or not, this edge is rooted in simplicity. It really is simple. If you look at traders or teachers who have been trading for a relatively short time, we're talking about 5 to 10 years. That's relatively a short time. Most of their methods are very complicated. A lot of convoluted logic, a lot of very complicated technical indicators, or ways in which to trade, tons of rules. But if you look at the traders who've been trading for 30, 40, 50 years, their methods are extremely, extremely simple. Maybe 5, 6 rules tops, maybe one indicator, and that's about it. Just a set of rules to follow, and that's basically it. And this is what has sustained them. So this is what I'm trying to instill in you. Once again, my goal is not to trade for you. A good mentor does not trade for his students. He teaches them how to trade, and that's what I'm trying to do with you. Okay, so since this is an educational classroom today, I want you to ask me as many questions as you'd like, but we have a lot of slides, plus we have a good group here today, and if we stop for every slide the way some other presenters do, we'll be here a good 2 or 3 hours, and I don't want to take all of your trading day up. So if you happen to have a question, please wait till the end. I like to answer the questions at the end, and I promise I'll get to each and every one of them. If you have to leave early, or if you have to, or if you're having technical difficulties, say you can't hear or see the screen properly, many times if you log off and then log back on, things will work okay. But if you're still having technical issues, don't worry. We will supply each and every one of you with a link to this recording, okay? So once again, if you joined us late, please wait till the end to ask any questions. All right, so let's begin. We're going to be talking about strategy 4 today. You've heard me speak about it. This is the first strategy that my mentors taught me some 41 years ago, and it still shows high levels of consistency. I use it on a daily basis in my own personal trading in some capacity. Let me share with you some of the highlights of this particular strategy we're going to be talking about today. It's for virtually all traders, from beginners to advanced. In other words, everyone who becomes a student of mine gets the same basic format. Doesn't matter if you're a hedge fund trader, which we have hedge fund traders that have signed up for my courses, or it doesn't matter if you've been trading for 20 minutes. Everyone's going to get the same basic format, and then we work out from there. We mentor you in order to make you feel comfortable and have it meet your needs. So if you want to trade 20 times a day, we show you ways in which to do that. If you want to trade once a month, we show you how to do that, okay? It was originally designed for traders looking to catch quick momentum moves. When I first started trading on the floor, I was in and out of this every 5 minutes. But once again, we design it to meet your needs. If you would like to hold on to a position a day, a week, a month, even a year, we know how to do that. We share ways in which to do it. Now, its intensity level. If 1 were the most intense of all strategies, where you couldn't take your eyes away from the screen, and 3 was the most relaxed, where you just entered an order and left, it's a very moderate number 2. Now, it only uses 1 indicator. That's how simple it is. The beauty of strategy 4 is that it can be applied to virtually any time frame, any direction, and any market. So it's not like other methods you may have purchased in the past from other presenters, and the fact that, well, this only works for stocks. If you want to buy this, it will only work for futures. And if you want to buy the one that works for currency pairs, you have to purchase another strategy. This can be applied to any market. Bitcoin, commodities, currency pairs, futures, stocks, it makes no difference, and makes no difference what time frame. Now, if you become a member of our course, you're going to receive free automatic buy and sell indications, okay? But these are strictly for educational purposes, because everyone is taught what to look for. In other words, this is not a system. A system is basically based on some black box parameters, and you really don't understand what it's based off. It's too convoluted, it's too complicated. Our methods are so simple and so easy to understand that after a couple of weeks, you'll be able to identify the setups on your own. But while you're learning, and ways in which to help you learn, we apply these buy and sell up and down arrows. These are how you can check your work, sort of like checking your homework to see if you got the right answers or not. So if you look at a chart and you say, I think that's a strategy number 4 buy signal, we'll show you exactly how to apply these buy and sell indications to see if you were right or not. Now, our edge here, as with all of our methods, is consistency. We're not promising that every trade is a winner. Once again, as I stated earlier, that would be silly to think everything wins every time. It doesn't work that way. I have losing trades myself, but what sustains me to be able to trade 30, 40 years down the road is having a method that's able to recoup those losses sooner than later, and then make some more gains. So that's what we mean by consistency, a 2 steps forward, 1 step back approach. And strategy number 4 is highly consistent. Okay, so those are the highlights of this particular strategy. Let's begin this 4-step process, which is so simple, by applying our new platform. We made it simple on purpose, just so that you could really understand the process and take all the hard work out, because we're trying to teach you and make it simple so that you can ultimately be in charge of your own trading destiny. All right, so let's take it step by step. And remember, if you have any questions, wait till the end, and we promise we'll go over all of them. But I have a lot of slides to share with you, so it should make sense halfway through this presentation. All right, step number 1. It goes without saying, obviously, choose the market you're interested in buying. The only reason why we say this is because strategy 4 can be applied to virtually any market. So, we're going to have a bias towards stocks in this presentation, but please remember, it wouldn't matter if we were looking at currency pairs or Bitcoin or futures or commodities. It makes no difference. That's why we say choose the market you're interested in buying, because we're looking at buy setups right now. All right, so let's say we picked EL. We're a stock trader, and we looked at this example we looked at earlier, okay? Someone looking at this and say, well, yeah, in hindsight, Steve, sure, it's obvious to see we've been going straight up in this stock from February of a year ago, but how would I have known that, in February? I would have liked to know not here that we're in an uptrend, but I would have liked to know back here that this stock wants to go higher. Okay, well, here's how simple it is. First thing you do with our platform is to click on the buy sell line in the upper green strategy tab. So if you look at our snapshot of our platform here, here's the green strategy tab with all of our methods and all of our strategies. In the upper left-hand corner is the buy sell line, the first thing we want you to click on. That's why it's in the very top left portion. You click that on, and a drop-down menu appears. All right. Now the buy-sell line is simply the 50-period moving average. We have different features, ways in which to apply it. Let's look at the simplest, and probably through our testimonials to people who have already become members of our platform, the most popular, and that's our fluid method. Okay. So this is the fluid feature, and once you click that on, the background automatically changes colors. You see this line right here is our buy-sell line, and anything above it is the buy zone. That means if price is in the blue background, that's the buy zone. You want to be a buyer. Okay. Now, once price goes into the reddish orange zone, that's the sell zone. That means you want to be a seller. So, to answer the student's question, why couldn't we have known we were buyers back here? Well, you did. The buy-sell line was showing you that prices were in the buy zone as far back as February 2017. So we didn't know how high this stock was going to go up, but we knew that we should only be looking at this stock from a buyer's perspective. There's no reason we should have been thinking of selling. This is how most students fail. See, they listen to other things other than the market in front of them. They either listen to somebody in a chat room telling them that this is overbought, or they listen to someone on TV telling them that the economic conditions are terrible and that we got to sell stocks and get ready for a big crash. But they don't listen to the chart in front of them. And what was the chart telling us? It was telling us it wanted to go higher. That's all we need to know. If you want to listen to fundamental news, if you want to look at support and resistance, if you want to look at Fibonacci, you're more than welcome to. But is it required in any of my courses? Absolutely not. Remember, our methods are simple. We don't overcomplicate our trading. So there's no reason to look at that. I used all of that. Trust me, if you're just new to trading, I was trading 41 years ago. I started trading in the 70s. I looked at Fibonacci retracement. I looked at volume. I looked at overbought, oversold indicators. I looked at fundamental news and earnings reports. And if it didn't work for me 41 years ago, do you think it's going to change now? I was lucky enough to have my mentors tell me the same things I'm telling you today, is that stuff doesn't matter. It's not consistent. So don't worry about it. Just discard it. Let it go. And it took me a while to grasp that concept, but once I did, that's when I started to become consistent. So if you have the courage to let go of that, feel free to, because trading is really simple once you know how to listen to the market. All right, so we know now that we're in the buy zone, okay? But how could we have taken advantage of that? Well, step 3 now. We only want to trade buy signals that have a steep upward sloping buy-sell line, because that's showing us that there's momentum, okay? So if we look at the chart, we see actually that we've had a nice upward slope here. But at this point, this is where it really kicks in the hyperspeed. It just goes almost straight up. So this is where we want to look for our buy signals, okay? Imagine a river, okay, and you want to get from point A to point B on your raft. Now, if you're going on the river, if that raft is basically moving like a pond, there's hardly any movement in it, are you going to get from point A to point B very quickly? No, not at all. But if there are a lot of rapids, if there's a lot of current in that river, you're going to be moving nicely and you'll get to your destination quickly. That's the point of what we're trying to make here with this upward slope. If you have this nice upward slope, that means there is momentum, there is current in the river, which is the market you're looking at. That's what you want. That's where the high probability setups are. So this is what we're looking for, okay? Now we go to the next step, step 4. All you have to do is click on strategy number 4 in the upper green strategy tab. So we go back to the upper green strategy tab, we click on strategy number 4. And remember, this is all part of the process while you're learning. Once you understand this process, you really won't even have to click on these strategy tabs because you'll know where a setup is. But while you're learning, you would click this on, click on signal arrows, and guess what? All of the strategy number 4 buy setups automatically appear on your screen. So this is the area where we have this real strong upward momentum that you're looking for. And these are all the high probability setups. See how simple this is? That's the 4-step process. All right, you want to click on the buy sell line and then you want to apply the strategy 4 setups. Look for that strong upward slope. Now, this is if you want to be a buyer. What if you want to be a seller? What if you like to buy puts? You know, we're not telling you how to enter the market. How you choose to enter is up to you. We're just teaching you high probability setups. If you want to purchase puts, if you want to have a spread, it's up to you. Or if you want to purchase or short the stock, it's entirely up to you. Let's look at some sell setups, okay? Step by step, using the same process. Step 1, obviously choose the market you're interested in. This can be virtually any market. Today we're going to be focusing on stocks, but later on in today's presentation, I'll show you some other markets and some other time frames. All right, so we're once again looking at stocks. We're looking at the stock OC. Obviously, this stock has a downward bias, and at this point, it really kicked in and went much, much lower. Someone, once again, the way most traders trade is the opposite. What they would do is say, well, you know, I took this $10,000 class in following what the institutions do on support and resistance. And Steve, this is some major support here. Look at this. It was confirmed with a volume. It was confirmed with some proprietary indicator, which I'm not really sure what it's based off of. So I bought here and it kind of held for a while and then this happened, okay? This is the way most traders trade. Why? Because you're listening to what the institutions or what some convoluted indicator is telling you. Remember, the reason why most traders fail is because they don't listen to the source. And that's the chart you're trading. So what's the source telling us? Well, the way to find out is to go to step 2. Click on the buy sell line. That's the very next thing you want to do because it's telling you whether you should have a buyer's or a seller's perspective. So you click on in the upper left-hand corner, the buy sell line, the drop-down menu appears, and once again, click on fluid. Once you do that, now we know, going all the way back to the beginning of February of this year, that there's no reason we ever should have been buying this stock. I don't care what the institutions are doing. I don't care what the earnings are. I don't care what some guy says on TV. Why? Because we were in the orange-red sell zone. So the market is, giving me my clues as to what to do, not some outside source. I take all of my information from the chart in front of me. And so since we're in the sell zone, I'm not going to be a buyer. That's like swimming upstream. Why would I want to do that? I'm going to go with the current at my back. So if the direction is going lower, I'm a seller. Okay, see how simple this is. Now, step 3, we're only going to trade sell signals that have a steep downward sloping buy sell line. So as we see here, the buy sell line, which is just the 50-period moving average, okay? We're not withholding what this is. This is just the 50-period moving average. It's kind of going sideways to lower here, but at this point, it starts to really kick in and have a strong downward slope. All right, so this is where we want to be a seller, right here, where the river has a strong current to it, okay? So the way we find out, once you have become a member of mine, you will learn how to automatically spot where the setups are. Like looking at this chart, I know where the setups are. But if you're learning, you would simply go to step 4, which is click on strategy 4 in the green upper strategy tab. Right here, where all our strategies, techniques, and methods are. Click on strategy 4, the drop-down menu appears, and you just click on signal arrow. And look at all the sell signals that were generated, okay? You see how once you learn how to let go of all these useless techniques that really don't have any consistency and simplify your trading and only be in sync with the market instead of trying to fight it, you become a much better trader in terms of consistency. So look at all the setups here, all right? All the sell setups you could have taken advantage of. Now, some of these setups are better than others. I'm not going to say that there aren't. Some, for example, this setup right here, you would have sold and it went up a little bit. Now, provided you had a tight stop, you may have been stopped out. We have different stop levels in our courses. We have different entry points in our courses. So it's up to you how you want to trade it. But let's say you got stopped out. So some of these are better than others. We show you. In fact, let me give you one technique today for free to show you how you can possibly increase your odds for consistency. Instead of just randomly taking whatever signals there are, sometimes we have seen in the past, and our members have told us, that the signals closest to and or touching the buy-sell line have very high probability rates. And as you can see here, this signal was touching or very close to the downward sloping buy-sell line, and then look what happened. All right, so those are the 4 steps. You see how simple it is to be a consistent trader. There's not a lot of hard work you have to do. Remember though, we are an educational company. We are teaching you in the courses how to identify and spot strategy number 4 setups on your own. We only apply the up and down arrows to check your work. But later on, as you become more accustomed to the rules and you really have a lot of experience under your belt through paper trading, which we require of all of our students, you'll be able to spot them like the back of your hand. You won't have to use the up and down arrows. You'll see them automatically. But let's look at some more examples here using what we taught you. All right, the buy-sell line. At this point right here, price started to consecutively close in the buy zone. All right? And as we can see, we have this strong upward slope here. We have a buy signal generated right touching or right next to the upward sloping buy-sell line, and you have a nice high probability trade. Now someone said, well, what about this, Steve? I mean, you would have lost here, right? Well, not really, because remember, only take sell signals that have a strong downward sloping buy-sell line. Now, is this sloping downward and very strongly? No. So see, this is a filter that we teach you in the course that you would not have taken that sell signal. And you would have taken this one, which has an upward slope to it. About LKQ, okay? Strong downward sloping buy signal, or I should say buy-sell line. Nothing but sell signals generated. Look at the signals that were closest to the buy-sell line right here, this little cluster. See the high probability sells you could have had? This was just coming in the last week of April. How about VVC? Okay, once again, we have a sell signal. Now, this is what we talk about consistency. This is a sell signal. It's valid. It's in the reddish-orange sell zone. And we have kind of a downward slope here. So had you taken that, most likely you're stopped out. But look at the buy signals where you could have recouped that loss and made even more. Okay, so this is what we mean by consistency. 2 steps forward, 1 step back. There's absolutely nothing wrong with having a loss from time to time. It's natural. It happens all the time. The best traders in the world that I know of who have been trading 50 years still lose every once in a while. But they feel confident in knowing that they have a method that's able to recoup that loss and then get back on board with gains. This is what consistency means, and this is what we're trying to share with you today. Next example here is an MAN. Okay, where is price in relation to the buy-sell line? Price is below. So why would you ever want to buy if price is below? All right, and someone would say, well, yeah, Steve, it's easy to see. Look how it fell out of bed here. Yeah, but going back to February of this year, we knew already in advance not to be a buyer. Even though you have these little small rallies, use them to go short with the sell signals as opposed to go long. Now, if you wanted to wait for the high probability setups, you would have waited for these two right here and look at the market as it touched the downward sloping buy-sell line. Let's look at ZTS. We have a very strong upward sloping buy-sell line and price is in the buy zone. So if you wanted to take the high probability setups, here's one that was touching or just about touching the buy-sell right at the very bottom here when price was roughly about 62.5. We have another one right here at this cluster all the way up when the market was basically about 20 points higher. And if you wanted to, if you're more aggressive, you could have taken these signals as well. Now, letter D has some very strong downward sloping buy-sell line example here. As we can see, we're kind of rolling over, and at this point, we start to really slope downwards very strongly. If you want to be conservative, you would have bypassed these setups and only taken this signal and perhaps this signal. But this is where you see the strength in the momentum, how these signals are followed by some very strong downward moves. As you can see, these ones didn't have that strong downward move. The slope hadn't really started to kick in yet, and you were further away from the buy-sell line. So it's up to you. We're just showing you different ways in which to add to your consistency or change your trading. In the end, it's up to you to decide, not us. Remember, a good mentor teaches you how to trade, but does not trade for you. That's why we don't have trading rooms at Specialist Trading Pro Trader Strategies, because that would turn the whole philosophy into a crutch. You wouldn't know how to trade for yourself. You would once again be relying on someone to tell you how to trade. And that's why most traders fail. You have to get the information, you have to study, and then you have to get to the point that you make your decisions, not someone else. Okay, TCF. Once again, we have a strong upward slope. As you can see here, a sell signal was generated. Sell signals should only be taken with a strong downward slope. So since the slope is going upward to sideways, we don't want to take this. So you would not have lost money here. But you could have taken all of the setups that were touching the buy-sell line, and then the other cluster here before the nice run up. So you could have gotten long in the early 20s and ridden it all the way up to the mid-20s. Now CVS, here's an example of where the current was so strong it never went all the way back up to touch the buy-sell line. So this is where sometimes it pays not to wait for that. So this is why we say it's up to you to decide. You know, a lot of traders like to wait and take the conservative entries when they're touching the buy-sell line or very close. Others still say, that's okay, I'll take all the sell signals or buy signals. It makes no difference to me. ETFC, a very, very strong upward sloping buy-sell line. Look at all the buy signals generated. Here was one touching the buy signal, or I should say touching the buy-sell line. Here are some more touching the buy-sell line. The sell signals would never have been taken. So if you had taken this very first one, roughly down here about 38, you see the market went all the way up to 62. So just in the past, I would say, couple of months, that's nearly 25 points to the upside. If we look at Pepsi, a very strong downward sloping market. Why would anyone want to buy this? This is the way most traders fail. This simple rule has kept me out of so much trouble by being on the right side of the market. And we made it simple by coloring the back of your screen. Now, this is an option. You don't have to have this if you don't want to, but so many of our students have told us how they love this feature because it automatically tells them whether they should have a buyer's perspective or a seller's perspective. It's so simple, and if you want to take the conservative approach, you simply wait for signals that are generated close to or touching the buy-sell line, such as this one right here around 114 that went all the way down 10 points, or this one right here close to roughly about 109 going all the way down about 9 points. And when you look at HUM, once again, we start off with a nice upward sloping buy-sell line. And two signals to this sell side were generated. So should we have taken them? No, because we need to have a strong downward sloping buy-sell line. So we didn't take those at all right? We waited, even though the market really took off, we waited for it to come all the way back, touch the buy-sell line. A signal was generated right here, roughly about 270, and the market went up 30 points coming into this last month. Letter T, we kind of have a sideways rolling over buy-sell line, and that starts to really kick into gear right here. We have a nice sell signal, roughly about 37, and then the stock went down 5 points coming into the end of April. And NDAQ, this is all using the same process which I explained earlier. We simply choose the market we're interested in. We click on the buy-sell line. We see whether we should have a buyer's or seller's perspective. In this case, a buyer's perspective. We wait for there to be a strong upward slope. Now, right here, the slope wasn't that strong, but let's say right here, you would have been more interested. So let's say you would have taken this signal, roughly about 84, and the stock went up 5 to 6 points coming into the end of April. All right. You don't have to take every signal. You can filter out trades you don't want. If you want to take every signal, that's fine. It's up to you. Remember, we're not here to trade for you. We're here to provide you with education and then let you make your own decisions. Imagine you wanted to learn how to swim or how to play golf. You know, a good teacher will teach you how to do that. They'll get in the water with you, they'll go on the golf course with you, show you what to do, but they're not playing golf for you and they're not going to swim for you. You're going to have to do that on your own. But it's no different with trading. For some reason, though, we've all been taught, well, I can't learn how to do this on my own, so I'll go to a website where I pay monthly fees so that someone can tell me what to buy or sell. Or I'll go on TV every day to find out what this guy thinks I should buy or sell. Or I'll listen to the institutions and find out what they're buying or selling, and I'll just copy them. That would be similar to having someone swim for you or having someone play golf for you. But that's the way traders trade. We're always making our decisions based off of what someone or something is telling us how to trade. The market is the only thing you should be taking your decision process from. The reason why traders don't do that is because we've never been taught. That's what our goal is at Pro Trader Strategies and Specialist Trading, to teach you so that you can be in charge of your own trading destiny. As we look here in PPL, look at this cluster of sell signals, some of them touching the top strongly downward sloping buy sell line. If you missed those, don't worry, there was a lot more here. And even if you missed those, there was one right here that was almost touching roughly about $31 all the way down to $27, okay? So this is the beauty. Even if you didn't take these sell signals, don't you think our proprietary buy sell line feature, the fluid line, could have helped you? We knew as far back as October 2017 not to be a buyer in this stock. Why? Well, because the earnings were bad? Oh, no. Well, because of the economic conditions? Oh, no. Maybe because of the volume? No. Well, how about the institutions? No, because the market was below its buy-sell line. That means it's telling us it wants to go lower. So the market was telling us, nothing else. So if for any other reason, you would have been out of this market as a buyer. If we look at MPC, same thing here. The majority of bars are on the upside. We can take all these buy signals if you want to, but they're not very close to the strong upward sloping. So let's say you didn't take them. Well, we started to go into the sell zone here, but no signals were generated. And then once again, we have buy signals. Now this buy signal was generated touching the upward slope. So you could have gotten long here, roughly about 69. And coming into the end of April, the stock is up roughly about 15 points higher. As we look at BIIB, another strongward sloping downward buy sell line, and it's so the momentum is so strong to the downside that price never bounced all the way up to touch it. So this is a case where it would have been wise just to take the actual sell signals. Once again, this is coming into April. Now, one thing I want to share with you, you see here, this is a very strong downward sloping sell stock, or stock that had a seller's bias coming into the end of April. And if I backtrack and I go back, MPC had a very strong upward sloping upward bias coming into the end of April. Okay, so what does this mean? This means that even though it's not required, we tell each student to trade each stock or each market on its own merit. In other words, there's nothing that says that, well, because we're maybe in a bull market, that you can't take any shorts. Or maybe we're in a bear market, you can't take any long setups. We only take each signal for what it's based off of. Now, if you say, well, gosh, I just don't feel comfortable with that, Steve. If the Dow is under its buy-sell line in the sell zone, I don't want to buy a stock that's bucking the market. Okay, then you don't have to. There's no law that says you have to. Remember, we're not trading for you. You're making your decisions. But it's not required. You can take a one buy signal in one market and a sell signal in another. You don't have to be in sync just because one market is going one way and another, as you see here, is going the other. It's entirely up to you. Now, if we look at VRSN, we see here in the beginning, we had a buy setup that went straight up, and then we pulled back again for another buy setup, coming back to touch the upward slope, and then it went back up again. So two examples of how we say there's this filter where you can only take the signals that are very close to or touching the upward sloping buy-sell line. And many times you will have added consistency only by taking those setups. If we look at GPS here, we see here that we have a strong downward sloping market. One sell signal is almost touching here, produced some nice results. Here's another one and some nice downward results, okay? This is all coming into the end of April. Now, a lot of the students say, well, Steve, Okay, I understand you have a stock bias today because we're talking mainly about stocks, but how about different time frames? I like to swing trade and I like to look at weekly bars, sometimes even monthly bars. So is this not going to work for me? Does this only work on daily bars? Well, let's look at some weekly time frames here. All right. Our first example is in gold. Now, this is an ETF for the gold index. Let me share with you using a weekly bar if you wanted to invest in gold or a stock based off of gold, which is a GLD, how this could have helped you. This is going back to last year. As we see, we have an upward slope in the buy-sell line, and we're met with a sell signal. So someone would have said, well, this is telling you got to sell gold, right? Well, no, not using this technique, you wouldn't have, because in order to sell, you need a nice downward slope in the buy-sell line. And is that sloping downward? No. The market is telling you that the current is going up. So we don't want to buck the current. And that's a good idea because as it's going up, 2 weeks later, it generated a buy signal right here. And this was in December of last year. And had you taken that, that's a nice investment in gold. Okay. That was a weekly chart of GLD. How about a weekly chart of GE? All right, same thing, but now the opposite side of the coin. We're going all the way back to February of 2017. This stock is, a lot of people have just been, sharing their experience of what a bad underperforming stock this has been. And they just couldn't believe how they've tried to pick a bottom in it and it keeps going lower and lower and lower. This is the way, as we said earlier, how most traders trade. You're always trying to pick a bottom to, tempt the gods to say that I know exactly where it's ending. I know where to get in at the bottom and I know where to get out at the top. I've been trading for over 40 years now, and I know, maybe 1% of traders who are able to do that on a consistent basis. The rest of us, myself included, have a very difficult time finding the exact bottom or the exact top. So therefore, it's a lot easier in trading with the trend. The overall trend at this point in February of 2017, over a year ago, was telling us GE wanted to go lower right here. So who are we to try and think we can pick where the bottom's going to be? Remember, traders love to play the victim game, but once you learn how to listen to the market, you never have to do that because you're in sync with the market most of the time. And so if the market is telling you it wants to go lower, well, you're not going to be a victim because you're going to be able to take advantage of these sell signals all the way down. And you won't have to blame that chat room you subscribed to that told you to buy here in GE in September of 2017 because a nice bottom was being made. And then that other class you spent $10,000 that said all the institutions were buying right here, you won't have to blame them. Or you won't have to blame that indicator that said this was so oversold you have to purchase right here. You'll know that you're not purchasing anything. You're going to be selling all the way down because you're in sync with the flow. You have the current at your back. Now, a lot of people have always told me, well, Steve, this is great, but I know if news comes out, it supersedes everything. There's no way you can use this in the face of news. Well, once again, as I stated in the beginning, our methods are all about consistency. We know we will have losses from time to time. Sometimes a signal will be generated and a news event will come out and it will go the exact opposite direction. That's okay. It's all about 2 steps forward, 1 step back. But what I have observed in using this technique for over 40 years is that oftentimes, because we're only listening to the market knows in advance many times what the news is going to be. And therefore, we're already ahead of the game. And when the news comes out, you're usually not guaranteed, but many times we've seen that you will be on the right side of news. So this is often something that adds to your consistency. Remember, this is not guaranteed, but let me just show you what happened yesterday. All right, Yahoo reported that INGN beats first quarter earnings estimate and lifts the 2018 view. INGN reported adjusted first quarter earnings per share of 48 cents, beating the Zacks consensus estimate by a whopping nearly 78%. Earnings also rose the same margin from a year ago figure of 27 cents. So very good news, right? If we look at the chart, this is how the stock gapped up yesterday. So this is the way most students will look at this saying, see, Steve, when news comes out, you're usually going to get killed, because no one knows what the news is going to be. No one has insider trading. So how do we know this is going to work? Stuff can come out all the time and I'll lose a lot of money. And it's true, you may be on the wrong side from time to time of a news event, but it's been my experience, students have told us, we've seen over time, that because we only take our cue from the market, many times it's already built in. So because we're only listening to the market, we're not listening to some guy on TV estimate what the earnings are going to be, or we're not looking at some report on what the estimation is, or coming up with our own discretion. We're just listening to the market. Many times, because it's built in, the market can tell us in advance. All right, so let's apply the process we taught you about, okay? Let's apply the first thing, which is the buy-sell line in the upper green strategy tab here. So we click on buy-sell line, and we use the fluid feature, and automatically we know, going back to the beginning of April, consecutive closes here in the blue buy zone, that we were only going to be buyers. So I don't care what you were thinking about, maybe selling this or the earnings were going to be bad. The market was telling us it was most likely going to go higher. How high? We had no idea. So we knew right off the bat that we're going to be buyers. We're going to have a buyer's perspective, but we need some structure. We can't just say buy at the market. We need a little bit more structure. So that takes us to the upward slope. So that's the first thing. We want to see that we have some strong current at our back, and that's where the upward slope started. So that's the first part of our structure. We have a nice current, nice momentum to the upside. So this is where we want to look for signals right here, from this point to this point. Now we click on strategy number 4, click on signal arrows. Guess what? 2 days before that announcement, 3 days before, on the 26th of April, strategy 4, the strategy we're talking about today, generated a buy signal. All right? So do you see how the market told us? Not some earnings report, not some announcement that came out on the 1st, but how the market told us in advance of that 33-point gain. Do you think you would have liked to take advantage of that just 3 or 4 days ago? Well, if I'd given this presentation last week and you became a member of this course, you may have been able to have done that. But unfortunately, we're about a week late. But that's okay. There are things like this happening all the time. It's all about consistency. Now, are we going to guarantee you that this happens all the time? No, but we're just trying to show you that we're not cherry picking, the best examples from 8 months ago. This happened just this past week, okay? Now, once again, we've talked about stocks. Let's just show you a few examples of how well this can work in different markets in different time frames. If you're an E-mini S&P trader, the way I am and the way I use this, well, let's look at a 30-minute chart of the E-mini in April, coming back to the middle of April. Now, someone would say, well, Steve, how can this work? You had a straight up market on a 30-minute time frame, then a straight down market. Well, we do the same process. We apply the fluid buy-sell line, and we see here that we have a nice, strong upward slope. And so this is where we want to take advantage of buy signals. And you could have taken advantage of all these buy signals. Now, once the slope changed and price started to go in the sell zone, we take advantage of all the sells in the strong downward slope. If you wanted to be a more conservative trader, you only would have taken the sells that were generated touching to or very close to the buy-sell line. So that's an entirely different market, an entirely different time frame. How about another different market? How about the forex markets? Okay. Let's look at the euro dollar. This is the 4-hour time frame. Another time frame. A lot of currency pair traders like to look at 4-hour time frames. Okay. Obviously, in hindsight, this was in April of last month, coming into the end of April. The euro dollar on a 4-hour time frame is in a downtrend. Someone looking at this would say, well, see, this is not hard to see that we should have sold. Yeah, you're right. But that's right here. How about somewhere up here? Would we have known to sell up here? Well, click on buy sell line. And yes, we knew in advance, days in advance, that we would be sellers on a 4-hour time frame of the euro dollar. Why? Because it's in the sell zone. So you see, it makes no difference. This feature can be applied to any market, any time frame. It doesn't matter if we're looking at daily bars of stocks or 4-hour chart of the euro dollar. Now, the buy sell line is basically going sideways to downward here, and here's where it kicks in and we start to have that strong downward slope. So that's the first part of our structure. Now we want to see where the sell signals are. We click on the strategy 4 sell arrow tab, and there was a sell signal. You think you would have liked to take advantage of that? It's roughly about 200, or I should say, yeah, about 200 pips in just a couple of days, or $2,000 per unit. So this can be applied to any market, any direction, and in any time frame. So let's recap now. Remember, step 1, choose your market. The reason why we say choose your market, I know it sounds a little silly, but the beauty of strategy 4 and of all these techniques is that they can be applied to any market. So choose whatever market or time frame you're interested in. Step 2, click the buy sell line. This is going to tell you whether the market has a buyer's bias or a seller's bias. How? By coloring the screen either blue or reddish orange. If it's in the blue buy zone, you know that you want to be a buyer. There's nothing you have to think of. There's no earnings you have to look at and try and figure out if they're going to be good or bad. There's no institutions you have to analyze. There's no chat room or guy on TV that you have to listen to. All you have to do is click on the buy sell line and it tells you if you should be a buyer or a seller. But we need some more structure. So this takes us to step 3. We want to click on the fluid feature, because the fluid feature is going to tell us that nice either strong upward slope or the strong downward slope. So that's the first part of our structure. The last part, step 4, is click on strategy 4. Now remember, in our courses, you'll automatically learn in about 2 to 3 weeks how to identify a valid strategy 4 setup. But while you're learning, we've made it simple by as easy as just clicking on the strategy 4 tab and then the signal arrows, and you'll see where they are automatically been generated. You can check your work. You can check to see if you're in line while you're paper trading. This is how simple it is. Now, I've taken a good 45 minutes to explain how to apply it. While you're using this during real time, while you're actually trading, it will take a matter of seconds to apply it this simply, okay? I just wanted to spend the last nearly hour showing you how simple it is. And the reason it's simple is because we made it simple. We generated all this by just one click away on our new PTS Primo chart. That was our goal, to make learning and trading as simple as possible. It doesn't have to be complicated. So here's your attendee discount we're going to be offering you today. We're going to be offering you strategy number 4. This is a strategy we talked about, okay? This is where you get instant course access. It's detailed instruction. It's an online course. You're going to get 15 video lessons. And in the course, I know a lot of you, your questions may be, well, Steve, this is great, but where do I get in? Where do I get out? Where's my stop placement? We teach you all that in the course. I couldn't really talk about that today because it wouldn't be very proper to give away all the rules and all the different exit and entry levels for free when people paid good money for this course. We also provide you with educational signal alerts, okay? This includes the add-ons if you want to use this on your platform as well. But you know, the best thing about what we share with you is that you can still use this on any platform. You can apply the buy-sell line. You won't have the fluid feature, but you'll still see prices above or below because it's just simply the 50-period moving average. And then we can supply you with the add-ons for the up and down arrows. But it won't be as easy as it is on the platform. The platform is what makes it so simple. So this is what we're including. We're going to include 6 months of our new PTS Primo charts absolutely free, just to show you how simple it is to apply this process to your trading. Now, this is nearly a $900 value. We're throwing this in entirely just for free. Now, let me share with you what's included in this 6 months offer. Okay, obviously, you're getting trading strategy number 4. You're going to get our enhanced buy-sell line feature. That includes fluid background, the buy-sell line in many different ways in which to apply it and which to feature it. We're also going to give you 2 entry techniques. These are proprietary entry techniques called steps, which automatically generate buy signals for you to apply to any method or strategy. So if you're having, I shouldn't say buy signals, but entry signals. So if you're having difficulty with your entries, regardless of what method you're using, doesn't have to be strategy 4, you can automatically click on the tab and it will show you where the high probability entry points are for your setup. We're also going to throw in our signal scanner, okay? I'm really excited about this. We're very proud of this at Pro Trader Strategies and Specialist Trading because we've made the process extremely simple. Once again, our whole format in both of our companies is to provide powerful education, but to make it as simple as possible. And we not only do that with our strategies and methods, we also do that with our applications, such as the scanner. Let me show you how simple this is. Once you click on a strategy tab, as you saw here with the signal arrows, it also gives you the option to click on scan, the scanner. Once you do that, this window will appear. You simply click on load symbols. We provide you with a list of different symbols from ETFs, currency pairs, futures, hot stocks. You can make up your own basket if you want. And in a matter of moments, they will appear right here in front of you. Once that happens, you click on scan. And in this case, we're clicking on for strategy number 4 setups. And in a matter of moments, you'll see either green or red horizontal bars in the scan. All right, the green bars just mean that there's a buy signal set up for tomorrow. The red ones mean a sell signal. And all you have to do is double click on either that bar, that green bar, or that red bar, and charts will appear. and you will automatically see the buy setups, okay, and sell setups. That's how simple it is. Now, this whole process takes probably less than a minute to do. So rather than search through hundreds of stocks and figure out what markets you want and figure out how to open up a window and then not really understand how to use the scanner, this is so simple. It takes you probably less than a minute to click on all the stocks that you're interested in for the next day, okay? But we're not stopping there. We realize we have a technical bias by offering you all of these things plus 90 technical indicators. But if you like to look at fundamental news, if you like to look at earnings, if you like to know what the economic reports are, we're also supplying you with free Bloomberg TV. That's another thing that we asked for, requested when we were designing our platform. We want to give traders the option to look at fundamental news. This is showing you that we're not trying to teach you, not trying to tell you how to trade, we're trying to teach you. So even though fundamental news is not in any way required, if you feel you must use it, that's fine. So once you know how to use our Bloomberg TV feature, you'll just simply click on an icon and a media page appears. Excuse me, that's live data coming in. You'll see a live TV of Bloomberg, and you'll see fundamental information coming in as it is happening at the moment. So that's also included in this feature. And then lastly, this comes with personalized tech support. For any reason you can't load up the media page or can't get a chart or the up and down arrows, don't worry. It's usually something that maybe you're not understanding or maybe there's a small bug. We will fix the issue in a matter of moments with our personalized tech support. This is all yours for 6 months, and then you can decide. This is a $900 value. We're throwing this in totally free so that you can really learn how to trade simply but consistently. All right, so we're offering strategy number 4 plus 6 months of the PTS Primo charting platform totally free. All right, a year from today, trust me, you will have wished you took this course. You just saw how I gave you tons of examples of how well this worked. Okay, there's going to be tons more examples generated within the next 6 to 8 months. So don't you want to take advantage of that going forward? All right, so here's the special offer we have. All right, strategy 4, 6 months free PTS Primo charts, scanner included, plus media page, Bloomberg TV included as well. This is only $9.95. Okay, now we're also including payment plans. So if $9.95 is something you can't come up with in one lump sum, that's okay. You can still contact Pro Trader Strategies, and for a small deposit, you can work a payment plan with them, and you'll still be up and running with this course. So here's how to take advantage of this great offer. Contact Pro Trader Strategies, my sister site. They handle all the course discounts and all the signups. You can apply this, remember, to your own platform if you'd like. If you're currently using, let's say, a TradeStation, or if you're currently using Sierra Charts or NinjaTrader, that's fine, but you won't have the ease of use as you have with our platform. So that's what we strongly recommend, applying this with the 6 months, and you can see how easy this simple process is. Okay, if you want, my suggestion would be to contact Pro Trader Strategies, call them directly at area code 310-598-6677 and request a payment plan. That way you don't have to come up with one lump sum, and you can have something that meets your needs. Just put down a small deposit and you can still be up and running and in the course. Now, the link at the bottom is the link that takes you to the sign-up page if you're ready to come on board and become a student of mine. That's not a live link, though. You would have to copy and paste that onto your browser. But if you look in the chat box on the far right, they have posted a live link there, and all you have to do is click that on, and you will be taken to the sign-up page. Okay? I'm going to leave all this information up here. I promised the last portion of our presentation I would reserve for any questions you have. I see we have quite a few, so I'm going to open them up. Okay, so let's see here. Question, is GD on your radar for long? It crossed above the buy-sell line 2 weeks ago, and the 50 is flattening out and closed on the top 25% of the range yesterday and trading above yesterday's high. Okay, this is coming from DT. DT has been associated with us for a while. Now, DT, I believe you are looking at a daily bar of this, okay? Because when we showed the GE example, we were looking at weekly bars because a lot of people were asking about whether this can be used on a different time frame. So I would have to look at that. I haven't looked at a daily bar of GE, but if those are in line with what you're saying, yes. But remember, you've only described the environment. You've only described what side of the fence we should be on. So in other words, if we have consecutive closes above the fluid buy-sell line, in other words, if we're in the blue buy zone, yes, we should be looking at GE from a buyer's perspective on a daily time frame. But remember, you need structure. You need that fluid buy-sell line to have a strong upward slope, and you need a strategy to generate a signal, in this case, strategy 4. So those are all prerequisites. Just because a stock closes in a particular zone does not mean you buy or sell at the market. Remember, I said at the beginning, we are just knowing what side of the fence to be on. Should we have a buyer's or a seller's perspective? That's the beauty of the fluid buy-sell line. But it doesn't tell us how to trade. In other words, I gave that metaphor of going to the river. If you want to get from point A to point B, if you see a river that has a lot of current behind it, if there's even some rapids, that's great. So now it tells you there's a lot of strength there. But that's not going to get us down the river. We have to have some structure in the form of a boat or the form of an inner tube or a raft. That's what a strategy is. So it's not just enough to know what side of the market to be on. You have to put together the structure, okay? Let's see. But it could go down to, Nelson is saying it could go down. I'm not really sure what you mean, but it could go down. Sure, anything could go down, but I'm not sure what example you're referring to, Nelson, if you want to restate the question. Donovan is asking, what time frame is the best for forex trading the strategy? Well, remember, Donovan, we always say the best time frame is the one that makes you feel the most comfortable. I don't know if you joined us late, Donovan, but I stated in the opening statements, our philosophy is not to trade for you. A good mentor does not trade for you. He teaches you how to trade. All right. We have students that say the best time frame are the 4-hour time frame for currency pairs. That's the best. And someone else will say, no. The best time frame are the 10-minute time frame. I have tremendous winners on the 10-minute time frame. Which one is better than the other? There is none. It's the one that makes you feel comfortable. Some traders, even though they may have nothing but tons of winners on a certain time frame, might not be able to execute the trade because there's too many examples. Others might say, this is perfect for me. So remember, there's no right or wrong time frame. There's no right or wrong market. This is the way the industry is built on, by you purchasing a method or purchasing a subscription and having someone tell you what the market is you should be trading, having someone tell you what time frame, having someone tell you where to buy, where to sell. We don't believe in that. So you should never ask the question, what's the best time frame? You should learn the method and then work on your own. We work with you, but work on your own time to find out what method makes you feel the most comfortable, okay? That's how you become a consistent trader, not by taking your answers from someone else, okay? Let's see here. Let's see, Mercy. Oh, Mercy's a great student of ours. She's asking, what if I did not just touch the buy-sell line, but it went past? Could that still work? Well, Mercy, remember, if it goes past and it's in the other zone, it won't generate a setup. So setups will only be generated in the proper zone they are. So in other words, you can have a bar that opens in the buy zone, goes up 2 points in the buy zone, but then closes 1 tick in the sell zone. And if it meets all the requirements, that is a valid sell signal. So it's up to you. Remember, once again, this is all done through paper trading, though. We have a number of students who don't like to trade that way. They say, well, Steve, I'm more conservative. I want all of the bars to be either in one zone or the other. I don't want them to be oscillating back and forth. Okay, that's fine. Is that wrong? No. Others will say, I'll take any signal. I don't care what it is. If it's half and half, it's half of the body is in the buy zone, half of the body is in the sell zone. It's okay to me. That's fine too. Remember, there's no right or wrong answer. The only wrong answer is when you're trading a style that makes you feel uncomfortable. So that's what makes you a consistent trader. That's why we say you have to become a part of this process. We're not, system vendors. We're not teaching you some system that everyone has to trade the same way. In fact, we don't encourage that. We encourage the opposite. We want you to trade differently than the other student next to you, because that's how you become consistent. You don't become consistent by all trading the same way. If that were true, then 80 to 85% of all traders would be successful, because that's the way the entire industry is based off of. You going to a site, going to a chat room, listening to some guy tell you where to buy, where to sell, or showing you where he buys, where to sell, and then everyone doing the same thing. It doesn't work that way. If that works so well, then why are so many traders failing? It's because it doesn't work well. You have to find your own way. Now, you should be given a basic format, basic structure that has shown consistency over the past, And then you should be mentored to trade the way that makes you feel comfortable with it. Well, guess what? That's the void we fill. That's the missing link. That's what we provide. We provide you with that education, and then we mentor you so you can find how to use that education in a time frame, in a market that makes you feel comfortable. Okay? That's the secret to consistency. Donovan asks, does this work on MT4? Yes. Currently with this offer, we include the MT4 add-ons. Remember, we have the add-ons, meaning the uploads for the buy and sell arrows on a number of different platforms. Sierra Charts, MT4, NinjaTrader, TradeStation, MetaStock. But you won't be able to see the process, the four-step process, the way I described today. So with the 6 months free of the platform, you really see how simple it is. It makes it simple, okay? And then you can decide after paper trading for a while, you say, okay, well, I've looked through a number of markets. I've looked through different styles that Steve teaches. There's a lot of different features, a lot of different ways in which to apply it. And I've chosen which ones make me feel the most comfortable. That's how you learn how to trade on your own, okay? Lynn asks, what is the platform looking at to generate buy and sell signals? That's a good question, Lynn. Well, the buy and sell signals are generated coming from our strategies. These are strategies that I learned some 30, 40 years ago while I was trading on the floor, and things that I continue to use in my own personal trading. They're basically designed to listen to the market. We don't want to give away the rules. It wouldn't be fair, but they have a certain set of rules, from 3 to 5 or 6 rules, telling you what to look for. And then we have different areas of where to get in, different areas where to get out, but they're all just structured formats. And then once you understand the format, then we work out from there. So let's say you understand the format and you say, okay, I like this strategy. This is pretty good. It fits in with what I like. But you know what? I like to swing trade. I like to trade, and have maybe a couple of trades a month. Great. We show you how to do that. Now, someone can get the same format and says, okay, I understand this format now, but I like 10 or 20 trades a day. We show you how to do that. So you see, everyone should trade differently. They should trade a way that makes them feel comfortable. It's the same basic format. We just alter and adjust it to meet your needs. But all of the signals are generated from strategies that I've been using some 4 decades now, and that have shown high levels of consistency. Okay, and they're extremely simple too. I don't want you to think that they have some indicators that no one's ever heard of, and that you have to study these things that you don't understand what they're based off. They're extremely simple. That's what our whole credo is, to keep trading and to show you how simple trading can really be. Okay. Let's see here, some more questions. Have you used this to trade options? Hi, Michelle. Good question. Once again, what we do is give you a high probability setup. That's what the strategies do. They show you a high probability area where the market's telling you it wants to go up. And then we also share with you a high probability area where the market wants to go down. Now, how you decide to get in is up to you. In other words, let me go back to my old metaphor of the river. We're showing you this river that has a very strong current. Now, you can get in on a big boat if you'd like. You can get into that river on an inner tube if you like. It's up to you. So you can purchase the stock, you can purchase options. It's up to you. Now, we have, if you're looking for more information on options, you can contact Pro Trader Strategies. But how you decide to enter is entirely up to you. We're just providing you with the high probability setups of what the market is telling us. And then how you decide to get in is up to you. We have a number of students who actually only trade options, and they take our signals, and the minute a buy signal is generated, they buy calls. Or the minute a sell signal is generated, they buy puts. Or maybe they apply a spread that has a positive or a negative bias. It's up to them, okay? Hi, Lars. Lars is someone we've been affiliated with a long time. Hello, Lars. He's known me since my work with Larry Connors. How is the buy-sell line designed? Well, we make no secret about what buy-sell line is, Lars. I know he's a student of ours as well. Lars, the buy-sell line is simply the 50-period moving average. This is not a proprietary tool, but this was something I was taught 40 years ago. The first thing I was taught by my mentors, and they said, listen, Steve, you're buying as the market keeps going lower and lower because you want to pick a bottom, and you're selling as the market keeps going higher and higher because you've been trained to pick a top. And every once in a while, you'll get a good trade, and you'll think that you're doing well. But ask yourself, how are you doing over time? And I told them I'm doing terrible. So they said, that's because you're out of sync with the overall trend. And I said, well, how do I get in sync with the overall trend? And they said, it's simple. All you have to do, whatever market you're trading, whatever time frame, apply a 50-period moving average. This is called the buy-sell line. Why? Because if price is below that overall 50-period moving average, the overall trend is down. That means you're a seller. If price is above, that means the overall trend is up. You should only be looking as a buyer. So what we did to make things simpler is to color the background of the screen. Anything below the 50 period is colored reddish orange. Anything above is colored blue. That's how simple it is, but how how powerful it is, as I just showed you through all these examples. Okay. Let's see. This touching the buy-sell line, would that also apply to other strategies other than strategy 4? Yes, it has. Remember, this is something we've noticed, and this is something our members have told us. But this is simply an observation. Remember, we're not a statistical company. We're not going to sit here and tell you this will work 78.9% of the time. No, because we don't believe in that. Because the choice is up to you. We've seen this over time that's a nice filter to have. But I also showed you examples where price didn't touch the buy-sell line, and then you had a nice sell signal, a nice buy signal take place. So we're just showing you different areas. It's up to you to decide. Now, will this work on other methods? Sure. Wherever there's a strategy, you can see that happening. But it's up to you to decide if you want to apply it to your trading or not. Okay, Mercy? Now, people are asking what the buy-sell line is in terms of what type of moving average. It is a simple moving average. Okay. Now, a lot of students have always, going back years, have said, well, Steve, can I use an exponential or can I use a weighted? Listen, it's not a magical indicator. What's more important is not actually the length of the period of the moving average or what type of moving average. What's the most important is the concept, meaning that even if you decide to use a 34 exponential moving average, this concept should be you only want to be a buyer if price is above that, or you only want to be a seller if price is below. Now, the reason why we use the 50-period simple moving average is, once again, to go back to our old credo, is to keep things as simple as possible. The smaller time frame moving averages work well in intraday trading. The higher time frame moving averages, such as 100 or 200, work well in higher time frames, such as weekly or monthly. But you don't want to be switching back and forth. That's what overcomplicates trading, when you have to switch indicators, when you have to switch strategies for different markets or different time frames. We want to keep things simple so that they can easily be transposed onto a different market, a different time frame, without changing anything. And in my 41 years, the 50-period simple moving average works better than any other moving average, any other period I've seen. So if you want to experiment, you are free to do that. Remember, we do not teach nor do we trade systems which require everyone to trade the same way. In fact, we encourage you to go out and look at different indicators or different, without overcomplicating your trading. If you want to still use the same concept, but maybe use a 62-period moving average, that's fine. It's up to you. Just paper trade first and see if it fits in nice with your method. Okay. These are all great questions. And remember, as you can see here, we are just trying to educate you. We are not a systematic company. We do not believe in that. Trust me, I've worked for companies that taught systems. I've traded systems. I've taught systems before. And I hate to say it, but each and every one of them eventually blew up, even though they may have had years, 10, 20 years of back-tested results, which were phenomenal. They all eventually blew up. Now, I'm not dissuading you from trading them. It's just that it's been my experience that there's no consistency in that. So why would I want to teach that? The only thing that I have found that works over time is by having you become a part of the process. So that's what we try to do. And the only way you can become a part of the process is if you have the sound fundamental education under your belt. So once you have that education and once you've understood the process, then you can make your own trading decisions and fully become absorbed in the process. That's what we're trying to do. And then there's no reason to come back to Specialist Trader and Pro Trader Strategies and come to a chat room or a trading room and find out what to do, because now you're in charge of your own trading destiny. This is our goal. We want to make you self-sufficient. So that's why we're educators. That's why we focus on educating you. Okay? So I can't think of a better way to do that than with this great offer we have. All right? I mean, just the 6 months of the platform alone would cost you roughly $900, where you're just, for about the same price, you're getting 6 months of it for free with the strategy. And the strategy is yours for life. Now, one thing I didn't mention, along with all of this comes personal correspondence with yours truly. So you have my private email address. You can email me anytime with any questions you may have, and I'll get back to you as soon as possible. So you'll have someone who's been trading these techniques and methods for over 4 decades now who can answer any question you may have. So this is also included. We're just trying to educate you so that you can be in charge of your own trading. We can't think of a better way to do that with a great offer and with 6 months free of the platform. So as I suggested, I think the best thing to do would be to call Pro Trader Strategies. There's no obligation. You can call them up. There's no obligation at all. Ask them some questions. But if you could design and put together a payment plan with them, you would be up and running for a small deposit and get all the information probably as early as today. So remember, once again, that's the information in front of you. Contact Pro Trader Strategies. Call them at area code 310-598-6677. And the link below is the link that you want to use to sign up if you automatically want to sign up. And that's also live on the chat box on the far right, okay? So thank you so much for attending today. I hope we educated you a little bit. I hope we showed you how easy and how simple it is to become a consistent trader. And I really look forward to all of you becoming students of mine and members of the Strategy Number 4 and the PTS Primo Charting Platform course. Thank you so much for attending. I wish you great trading, and I look forward to trading alongside with you. We'll see you next time. Bye-bye.